Shuchin Bajaj, sir. Can we have you here? He is the founder director of Ujala Sickness Group of Hospital, Gurugram. Can we have a huge round of applause for him? Next, I would like to call Dr. Vishal Gandhi, sir. Please come up on the stage. He is the founder and CEO of Pyrex Venture Advisor Private Limited. And now I would like to call all the esteemed panelists over here. Dr. Saarthak, sir. Can we have you here? Mr. Sameer Sharma, CFO Cygnus. So Sameer, sir, can we have you here? So can we have Dr. Monica Rana? Dr. Monica Rana, ma'am, Olchigo consultant. Please give a big hand for her. Next, I would like to call Mr. Manish Luthra, sir, from EBP. Can we have you here? Please give a big round of applause for him. Thank you so very much, sir.
Thank you very much. Thank you everyone for staying back till the last session. I can understand last sessions can sometimes be tough, but we'll try to make it as interesting as possible so that we have some actionables going back and you do have some take-home points when you go back home and reflect on the panel. We've been talking 2 days on hospital infrastructure, hospital sustainability. In fact, the very last panel we heard about innovative models on how people have taken up funding from charitable institutions, from the government to set up hospitals, equip the hospitals. And as Commander Bali told us, even taking viable gap funding for 7 years on top of the land building and the equipment, that was the way he thought. That was the only way to make a hospital sustainable in low-cost settings. We also heard about the Assam Cancer Foundation and how it is setting up 17 cancer hospitals all across Assam based on complete philanthropic funding, not just for the land building and capex, but also on an ongoing basis for the operational expenses. So is this the only way to go is something that we should reflect on. Can we work with hospitals in small towns and in resource constrained settings only if we have access to philanthropic or state funding, or is it something that we can manage on our own? Can we make a sustainable model on equitable healthcare offering rather than working on the previous model that we thought was the only way private healthcare could work, which was a very high margin, low volumes business? Because as we've seen in the discussions over the last 2 days, most of the private hospitals do not have occupancy levels of more than 60 to 65%. Even the best of settings, we don't have hospitals overflowing with patients. On the other hand, we should think of how to create awareness, how to create accountability in our system, how to create acceptance of the treatments that we are offering. So all these things are very important. I think we need to look at models that have been self-sustaining. We have the CFO of Ujala Sickness here. We've been doing a lot of work in small towns with Ayushman patients. The ethos of the organization since the very first day has been that no patient will be turned back due to financial reasons. And we have not got any funding or any aid from any government or philanthropic organization ever. It is a completely self-sustaining, profitable organization and makes 20% EBITDA margins, which is at par with some of the best performances up there at RPOB levels, which are less than 20% of the big city hospitals. So that is something, the model that we should all explore, and I hope Vishalji will dig deeper into it. The context is mostly how to make sure that we don't fall into the trap of high capex, high working capital models, which most hospitals do fall into. We take over a lot of hospitals that struggle, and we see that those are the problems coming in. How do we make sure that return on capital is acceptable to the investors? Because return on capital has been historically one of the banes of healthcare. It is a hugely capital intensive industry, we need to set up hospitals, setting up usually using up a lot of money upfront, and then even though they may become operationally profitable, the return on capital is actually quite abysmal. So how do we make sure that we ensure that for all our investors, we go up to their expectations? How to make sure we don't fall into the trap of working capital because of the rising government commitment to cover all patients with their insurance schemes. They already have around 60 crore people covered, and now the Prime Minister has said that he is committed to cover the missing middle, the 50 crore people in between that do not have access to any schemes. The 30 crore at the top, of course, are covered by either private or some PSU or state-run insurances. So if we have 50 crore people more coming into Ayushman Bharat or other government schemes, how do we deal with that? How do we deal with the loss of cash paying patients? How do we deal with the fact that governments will take their own sweet time to give us the money back? So all these are questions that we need to think about. I hope we'll have some actionable takeaway points once we end the panel. I would now request each panelist to give a short, crisp introduction of themselves so you all know that who you are facing up on stage with. And then I'll request Vishalji to take over the panel from here. Thank you. Can we start the introductions with you, Vishalji?
Yeah, so I've already been introduced, but my name is Vishal Gandhi, and I lead a healthcare practice at a firm called BioRx Venture Advisors. We do merger acquisition, equity financing, and project advisory for hospitals, pharmaceutical companies, biotech. So that's our niche. Over to Sameer.
Yeah, I'm Sameer Sharma, presently working as CFO for Ujala Signals Healthcare, and we primarily deal and run our hospitals in Tier 2 and Tier 3 cities.
Good evening, everyone. My name is Monica Rana. I'm Managing Director and co-founder of Altido Healthcare Consulting Firm. I come with 15 years of experience with various hospitals, including groups like Max Healthcare and Apollo Hospitals. Rather, I've handled small and mid-sized hospital of Apollo. I'm not talking about the large hospital, so I would like to discuss that experience also here later on. Currently, I'm running my own company with Mr. Rajesh Dahul, who's the founder. That's it. Thank you.
Namaskar, good evening. Myself, Manish Sutra. By profession, I am a commerce graduate and a chartered accountant with 24 years of industry experience. I work with manufacturing, retail, FMCG, processing, garment. For the last 11 years, I am associated with the healthcare. I work with Sarvotya Hospital in Fortis, and for the last 5 years, I am with the Max Healthcare. Happy to be part of this forum. Thank you.
Hi everyone, my name is Saarthak, and I make babies, and by that I mean I run a chain of fertility centers. We are headquartered in Delhi, but I have other centers across North India and Nepal. As a proficient IVF person, I am also very inclined into startups, sec diagnostic, not healthcare also. And I would like to say that I've been glad enough to have the esteemed presence of Dr. Shuchin and Dr. Vishal to be part of this because they have been with me in startups and other places, and I am very sure that the knowledge presented by all the panelists over here would be helpful to everyone some or the other way.
So thank you everyone for your presence, and I can literally tell you that we couldn't have had better panel than what we are actually seeing here today. And Saarthak represents views coming from a single specialty, which is IVF. We have Dr. Bajaj and his colleague Sameer going to be talking about tier 2, tier 3. And then Monica's experience working with large corporates. What I heard is Apollo and Fortis Max. I think that's very complimentary. And then, of course, we have a North India-centric hospital, which is Max. I think from a financial perspective, like every equity player would say, go and buy, right? Like so Max has seen a rapid expansion. And so I think from the audience perspective, I think you are going to get a complimentary view, and we'll try to make it not redundant, but make sure that every one of us presents a very complimentary view, and you get best out of the panel. So let me just share with you my experience. I've been part of healthcare financing for about 17 plus years, and my experience started in Medanta Hospital, and that's where my journey with healthcare financing improved. I would say, like, literally when we were financing Medanta Hospital, we appointed 5 TV consultants, and we were given a mandate that we have to fund no matter what. And that's where when we worked with five TV consultants, we realized that it's very important to see the matrix, the financial matrix and operational matrix. And we did a lot of deep diving, and we realized that in the financial model, and I'm sure Monica and many more colleagues who are from financial field, they'll agree that there are a lot of assumptions. And why I'm sharing with you that, because there's a lot of back calculation which happens to validate a financial model. And I was told that we will do 5,000 neurosurgeries, and literally we said, boss, Delhi today has a market which cannot do 5,000. The Delhi market in 2006 for neurosurgery, and thanks for the Max report that I referred, and I got that idea that you just can't do 5,000 surgeries. That capacity didn't exist. So data validation was very important. And a lot of hospitals, because they saw a success in Dr. Trehan's model, and everybody, a single specialty hospital or a multi-specialty hospital had an aspiration to work like Dr. Trehan. And between 2007 to 2015, there was a lot of corporatization of hospitals. People were acquiring hospitals left and right, and without realizing that it is not everybody's cup of tea. Even tier 1 hospitals that I looked at, the credit rating, like the way bank look at it, they look at credit rating, and most of these hospitals, over a period of time, their credit rating was actually below investment grade. And we don't get to know about it. I'm going to be only talking about what you probably may not have heard. You all have heard that healthcare is an amazing investment opportunity. But what you may not have heard, that a lot of hospitals which are run by the doctors, standalone doctors, they actually could never generate profits. Working capital at a cost of which is unheard of. Can you sustain? And I think this is why this panel of CEO and CFOs coming together from the beginning is very, very important. You cannot have a debt to equity ratio, which today you see. And one of the reasons why a lot of hospitals failed between 2009 to 2015, because the debt to equity ratio was really bad. There was nobody in the beginning to guide the doctor that how much debt you should take, right? So that is why the feasibility at the earlier stage is very, very important. And if you ignore that, then you can never make a profitable, sustainable business model. So I think with that context, what Dr. Bajaj shared, and and further I could add a little bit. I think it's time for us to deep dive into the financial matrix. What should be the key indicators to say that this is a good hospital, this is not that good hospital? How do you sustain? So I think we need to talk about sustenance, because a lot of hospitals, either they will go through M&A process or they'll go through consolidation process. But I think, how do we ensure that the matrix that is actually measured, which can quantify the sustainability of a hospital from the tier 3, tier 4 perspective? I think it'll be good, Sameer, if you can share your thoughts on that.
As far as the metrics are concerned, there's a standard operating metrics which everybody looks at: the ARPOB, the loss, the payer mix, and the client mix. Only thing is that what differentiates us from other hospitals is that we work and approach any hospital in a cluster model. So, and our investment capex is always asset-light model. Whenever we are going to invest any capital in any capital equipment, then we make a conscious decision whether it has to be a imported equipment or it has to be made in India, Indian product. So that's the decision making which we make at corporate level. And our organization system, as a organization structure wise, if I talk about, is very flat. So our decision making is very quick and very fast. So we don't have any kind of, say, layers into the management. So we have direct interaction with our hospital unit heads, and we make various kind of controls where if we are going to hire any resource or any manpower, as far as doctors are concerned, nursing is concerned, so that we give opportunities, and then we give opportunities to be to those doctors to be a star of that area, and we don't put any kind of pressure to our doctors to for any kind of means they have to bring certain number of revenue to the hospital. It's always the brand which works, and it's always the corporate team, structure team that work for hospitals management and operations. And when I say asset light model, then definitely we heard during the course of this conference during the day that there have been people who have been running hospitals on purely on government grants. They got land, they got building, and then they got similarly they got the working capital for to run those hospitals. But uh, uh, our procedure is a bit different. So definitely we look at there are a lot many assets in the tier 2 tier 3 towns where people have created a single specialty hospital, and there is promoter fatigue has set in, and so we look for those opportunities where promoters want to just give the handover the management and operation of the hospital to somebody of their, or their assets are stressed, means they have already invested heavily into the land and building and now equipments, but they are not able to turn around those hospitals. So we look at those kind of opportunities, we look for those hospitals, and then we put our cookie cutting model where we have set set of various procedure systems where say for example if we are going to put in the infrastructure, then we know the suppliers of the suppliers, so our infrastructure cost, our investment costs are lower when we are going to have a kind of modular OT. If you look at our modular OTs, those are state of the art modular OTs, and no, and they are comparable with the any modular OT which we see the tier 1 hospitals. So these kind of opportunities and these kind of matrices which we look at. So one thing I told about is that capital expenditure. Second thing I told about the resources where we don't put any pressure on the resources, and we keep our organization system very flat. So when we keep our organization system very flat, then definitely we do multitasking. We don't put unnecessary unutilized resources to the task which somebody a kind of junior resource can do. So that's the way we operate and the matrices we look at.
Thank you, Samir, for those wonderful insights. Let me turn to Saarthak. Saarthak, you manage a business which is IVF, and I think the matrix which is perhaps used by you, like looking at the dashboard, saying that today this is good, this month is good.
We have also gone into tier 3, tier 4 towns such as Hanumangarh, Nawashahar, Pilibhit, where I have ventured into and taken over IVF centers. So over there the margins would decrease, but as I said that the operational expenses and the other expenses that we have to develop or work in a metro city. Say we've just started into Pilibhit and Jaipur. So Jaipur expenses would be twice or thrice what we have to spend in Pilibhit to manage the whole center. So even if our revenues are half of what we have in Jaipur compared to Pilibhit, the overall margin is almost the same because the expenses in Pilibhit is I mean, we don't require that much manpower, we don't require that many counselors, we don't need to do all the probably the marketing and the infrastructure and the layout specificities and go over the top as we have done in Jaipur. So this is just an example that how are we controlling our cost to our expenses. And as I said that again, IVF primarily is a very healthcare marketing driven business. It's no matter what good a doctor you are, it's purely driven through marketing itself, and hence marketing is one thing that we have to control the cost on.
So, what kind of percentage of revenue that you spend on marketing?
It's easily around 15 to 16%.
Which I'm sure Dr. Bajaj can say that it is unsustainable in a multi-specialty hospital. So I'm glad that you actually shared that point, and that could be the...
Because our EBITDA margins are 20%, right? Not 32%. So that is how you get to spend extra on what I call the expendables.
Yeah, and you have to provide some returns to investors too, right? Okay, good. So let me come to Mr. Luthra. So Mr. Luthra, you represent a north-centric hospital chain, and it's multi-specialty, and relatively, I think it's what, 15 plus years, right? And you've grown through M&A. So any insights that you would like to share? That what is it that typically a multi-specialty hospital looks for when look for operating metrics. This is one thing I must get under control. If I don't get it, then my management is, and this synergy between CEO CFO is definitely doesn't exist. It is going to ask you like a lot of things which you may find it difficult to like answer, or maybe CEO is not able to work with you aggressively.
So, as I stated in disclaimer, the view expressed here or talked about is my own views. My organization may have a different.
Keep your.
So, if we talk about the metrics, and so there is not a single metrics that we look at when we talk about the healthcare. So broadly, we can put the different metrics in a different bucket. Say metrics related to P&L, metrics related to operations, metrics related to other finance activities, right? So when it comes to P&L, of course, the revenue growth is there, right? Then our tight control is required on the discount side. Now there is a common phenomena. People expect discounts. So close monitoring of the collection is also required. Then complete control is required on the material cost side. It's a very heavy cost in the P&L. So one needs to look into the reusability of the stock, where the regulator permits, right? Then the store consumption which you don't charge to the patient, right? And then, of course, we are not into this aggregator model, but sir was presenting it looked like a very good thing to have. It can bring a lot of efficiency, but we being we operate in a bigger space, so we don't know what kind of efficiency we can further get, right? And
is there any parameters which actually improved, because you had earlier 9 units, let's say today you have 15 units. Is there one parameter that you felt that has improved and which can create a better return on investment?
So it is the channel mix and the specialty mix. We are continuously investing in the medical programs. We are coming up the new medical programs, and we are looking for the patient mix which are very healthy kind of stuff. So CTI is the most.
Yeah.
So we are more focused towards the ARPOB side.
Yeah, and I think one area which I have been following recently about Max is the Max Lab, right? Getting into ancillary businesses, improving your top line and the bottom line is a very innovative way, which I think a lot of hospitals, especially Apollo could do it, but I think tier 2, tier 3 hospitals haven't been able to do it, but I think Max has gotten into Max Lab. So what's your experience about Max Lab integration into your business? Has it improved your financial
Max Lab was right from the beginning with us, but we have seen in the lot of tractions are happening in the pathology segment. Of course, a very capital intensive, otherwise competition intensive also sector, but a lot of actions are happening in that side. You can see the Adani Group has also ventured into that. So we have created a separate vertical, a separate company for that, and we are very focused on that.
Fantastic.
Yeah.
Monica, would you like to share the incremental views of all the panelists you have here on theme? Please go ahead. Thank you.
Thank you, Dr. Gandhi. Good evening again. First of all, thanks for having me here. I think we all have witnessed that healthcare has come to the forefront of every discussion since pandemic has hit the world. And the second wave, which has created much larger impact and need for having sustainable hospital that can quickly adapt to any circumstance with flexibility and integration. When we talk about sustainability, there are 3 pillars of sustainability: environmental, economical, and social. I'm not going to talk about the other 2. We are going to talk about economical sustainability here. And when we talk about tier 2 and tier 3 cities, my fellow panelists have also mentioned that despite of lesser healthcare services available in these cities, yet 100% occupancy is not there. So my point is, have we identified the model for the sustainable hospital, or are we still struggling to develop a hospital to make the existing facilities viable? And this really haunts me when I hear a lot of bigger hospitals in tier 2 shutting down, or they are selling out to somebody, or they are closing. So there are a lot of questions which needs to be answered here. First of all, I believe the need of the hour is to create a no-frill hospital. A no-frill hospital is nothing but a very well-planned, efficient, and a budgeted hospital which will have clinical competencies at its core. It will reduce the cost and the burden on the patient, and also it will improve the return on investment. We all must understand in tier 2 and tier 3 cities, the paying capacity of patient is not as high as in tier 1. Also, we must understand the insurance coverage, which is extremely low in tier 2, tier 3 or tier 4 cities. The patients are paying out of their pocket, and as I've also mentioned that the paying capacity is low. Probably that's the reason a lot of private players, barring few which are sitting with me, are not going into these cities because they understand if they spend so much on the capital as a capital investment, they will not be able to get the return on investment.
Monica, I want to pick up your
Please.
additional views. So Saarthak mentioned that you spend about 16 to 17% on marketing. So what's your experience on marketing spend? Like if it continues in tier 3, tier 4, do you think actually it'll help or it'll not help? Like there is a break-even point at maybe at 5%. Beyond that, it's not going to help. So what have you kind of dealt with some situation like this, or maybe your perspective will be very helpful?
So I think when we talk about tier 2, tier 3 or tier 4, I think marketing is not even a topic of discussion. I think the discussion is the availability of services. I mean, once there's a hospital, people will definitely get to know. Let me take an example of Paras Darbhanga and Patna. When Paras started in Patna, I have worked with Dr. Dharminder Nagar, who's the chairman of Paras Healthcare Group. He was really skeptical how the hospital would do. But once he started, he didn't need any marketing for that particular hospital. Probably a lot of patients, not only from Bihar, and Jharkhand, also from West Bengal, are themselves flowing into Patna to take their super specialty services.
A fancy building itself, that becomes a marketing.
I think fancy building is one thing. I think looking at the availability of services, how many tier 2 and tier 3 would have the super specialist available with them? Probably very few. And I think we are running out of the time. So I will very quickly say there are three key matrices, three key levers which we must observe, which is CFO, which is clinical, financial and operational. I think clinical parameters I'm not going to detail. We all know readmission rate, infection rate, sentinel event, clinical outcome, etc. And we all understand this is one of the most important factors for any healthcare industry. It's the backbone. Operational is extremely important. We are talking about patient satisfaction here. We're talking about net promoter score here. We're talking about attrition rate here. Human resources are one of the main and the biggest assets which are not available with us. So if we have them, let's train them and retain them. And finally, if we have our operational and clinical parameters or key indices at place, I think financial parameters or financial matrices are the result or the outcome of these two. When we talk about average revenue per procedure, standardization of OT kit, standardization of OT consumables, which we did with Apollo Spectra Hospital. Very briefly, I'll talk about it. When we realized for one particular surgery there was a single line billing or a package billing, as you say, we realized for a simple procedure like lap cholecystectomy, one surgeon was using a consumables up to 12 to 15,000. Somebody was using up to 7,000. So we realized there's a huge margin which we can save over here, and it's also about saving cost of the burden to the patient and also increasing our bottom line or the EBITDA, which is the most overheard term in the last 2 decades. And when we standardized these consumables, and we had no intention to restrict any consultant, which cannot happen, we just took all the consultant in loop. We everybody was in confidence that what is the purpose of this exercise, how will this benefit patient, the consultant in the hospital, and we were really able to save the cost of a surgical package from 5 to 8%. This is a very lengthy exercise.
This happened by indigenization. You did substitution of products. How did you do it?
No, we didn't do substitution of the product. What happens is the small hospitals do not run on the fixed salary doctors, because it is not possible for the small hospitals to have doctors on the retainership. It most of the time runs on the visiting consultant model. So when you have a visiting consultant coming to you who's got the fixed share in the package, probably won't bother on the consumable side. So there could be overuse of consumables. There can be opening of several consumables which might not be used, because at the end of the day consultant is taking what he's expected to get out of that package. Patient is also paying on the single line billing, but who is suffering at the end of the day? It is the hospital. So their profit margins were shrinking. So when we spoke to the consultant and when we took them in confidence, when we spoke to them, we could realize once we standardized the consumable for a package, it could save the cost, right? So, and similarly, we also did the standardization of OT equipment. I'll just quickly finish this. Later on? Okay.
So I think what we are going to do is, since morning, we've been hearing all the panelists, but we've I don't think we've had a chance to actually listen from the audience. They may have some Q&A, and we have a wonderful panelist. So I think we would like to open the house for a Q&A. I see, Dr. Shah, Dr. Kedarpal. Anything you want to share? Because it's not about, we sharing. You also should be able to share, which can benefit the audience. Please feel free to do that.
No questions.
Anything incremental, right? Which can benefit an audience. You want to share something?
काफी अच्छी तरह समझ में आ गया इसलिए कोई क्वेश्चन नहीं.
Very good. So, and I'm getting enough signal from Sajal bhai कि we are all tired. I think it's time to say.
काफी ध्यान से सुना इसे.
Chaliye, good. Appreciate it. Thank you. So, anybody has any questions for the panelists? I think that would be more better than me again talking the same thing. I think we're all kind of saturated. So,
there are no questions. I think it means only one of the two things. Either the audience is completely bedazzled or completely befuddled. So I hope it's the former with the panel here.
No, not like this. Not like this. I'll say something. I was not disappointed.
I think you're too humble.
Well, I've been listening to all the esteemed panelists and moderators. I think a very useful discussion, and we all know that healthcare is now going into a paradigm shift, and we in the last decade, if you see, it has evolved tremendously. And there has been an exponential growth, especially in the private healthcare sector. But the challenges will always remain. In spite of the challenges, we are growing, right? And the people who are doing wonderful job. And the industry, when we are talking of healthcare industry, it is not the hospitals. We all are part of the industry, your device industry, your insurance, drug, everybody. I mean, so that it is a collaborative effort actually. And since the theme is there, we are talking of the planning and infrastructure. The infrastructure is always, it looks very nice, very fancy to talk about the infrastructure. बहुत अच्छा बना है, बहुत सुंदर है building, ambience, everything is good. But operational challenges will always remain. Manpower challenges will always remain. The biggest challenge, which I see in my more than 30 years of career in the healthcare, and being CEO of various hospitals in Delhi, the physicians, challenges to deal with the physicians, and involvement of physicians in providing quality care, safe care, or implementation of NABH standards. When even I have been a principal assessor at NABH, I have done about 500 assessments in the country. Since inception, I have been involved with NABH. When we go to the hospital, when we want to talk to the physician, they shy away or they do not, come forward. So it's always the quality. According to those physicians, it is the quality quality manager who is responsible for implementation of all the quality standards implementation. So everything boils down to the quality manager. But then physicians' role is so important. They are so, underrated, or they are not involved. So it is a management which, top management or the CEO or the promoters, they need to involve physicians. I'm little digressing from your topic of your session, but this is just, I wanted to add, as you Vishal mentioned that, I wanted to add something. So,
no, I think those are wonderful inputs.
Yeah. And when we want to talk to the physicians, they are not there. Very few places, maybe 110% of the hospitals I have come across, where all the physicians are there for the opening meeting. They are there throughout with you for the assessment, and they are there to give, they are to accept. So that thing is lacking in our country across.
So you're suggesting that the higher involvement of physician will improve the quality infrastructure in the hospital, right?
Absolutely.
Okay, and that should also reduce the AMRs, right? There's a huge reinfection, and today people are actually talking about AMR. Now, one performance indicator which I think we should be talking about is how to see the reinfection rate, right? And there's a huge resistance happening, and everybody is just popping up antibiotics without even thinking. And I think there's a huge effort now to promote about only refer antibiotics when it is absolutely necessary. Otherwise, we are entering in a different zone, and managing infection will become a problem for anybody who's got an immunity compromised.
This is where the role of physicians, come into play.
Yeah.
So I think they have a very big role to play in the provision of quality and safe care. So that's it, I think.
Great, sir. I think that was a very important dimension. Thank you so much for sharing. Anybody else wants to share? We would
Yes,
also
sir.
like to be educated.
So nothing like it. I think my discussion or a small talk can be a motivational, quote for the private hospital. I'm into the healthcare industry. I think I'm serving a little bit. This is the first panel I heard like so focusfully. The thing is, I heard that long time back when investor, financer, they have no relation with the private hospital. I think Apollo was the first who have created a hospital to make it profitable, I think. So one thing I would like to say, I think I don't have much thing involvement in the finance. At least now our hospital or healthcare chain have somebody who are there to invest or to finance. That is the only thing I would like to say.
Sir, there are 9 to 10 hospitals which have gone public, right? They have gone public and they raised money from public.
Yes.
From that one Apollo, now you have 8, 9, and all are doing fantastically.
That means the process of sustainable private hospital, it's growing. That I can feel, not exactly, I can feel. Because I listened that long time back, that private hospital. Now let's talk about Shuchin Bajaj ji. He's focusing like I have seen. Now he is going here, now he is doing there. So it's really thing, because thing is he is a man of the match. Whether it's a T20 or one day or test match. So what he has done, he want to become a man of the match. So he has selected to the tier 2 because he can play a good T20 match. That I can feel about. Thank you, sir. Because he has selected tier 2 because his choice, he want to become a number 1. So he has gone to tier 2. He is a number 1. Maths guys, they can play. Now they can go to America also to become a number 1.
He travels to tier 2 as well. He travels to tier 2 as well.
Sir, merger acquisition is the flavor of the day. You can see the kind of deals are happening and the kind of listings are happening nowadays. Medanta is the latest one.
Yes,
then Yatharth is coming next month, and so the other players. So if we go back, say 15 years back, so healthcare was, don't talk about profit, right? But I just suggest you just look at the annual report of Apollo. Now they are not talking about the patient and attendant. They are talking about the consumer, and healthcare. They are perceiving the healthcare as a consumerization. So the era has started.
I have quoted only one thing. I have quoted only one thing that I heard from my senior, like Mr. Khetpal, and these guys are quite old. I am not that much old. So I used to listen this thing that Apollo is the first who has done a private hospital who make a profitable.
Yeah.
Now there are a lot of guys, I think, but nowadays if you talk about the south also, like KIMS is there. Recently I am working with them for Hiranandani Hospital. They have taken over. Hiranandani have a lot of money, but KIMS have a lot of experience. So there is something. What can be the key of the success? That experience and money has to be mixed.
So you need to.
It is not possible to.
So you need to fit the model considering the location.
I mean to say
what people wants.
Saab and Bajaj Saab, if comes closer, then it can be a profitable. Because money is also an important part of any setup.
Money is available in the market. People are
I
there in
think,
the game pocket.
I think we can take this discussion offline, so we will be here after that. But thank you very much. Yeah, thank you very much to all the panelists. It was a wonderful discussion. So, as I promised, we should have some takeaway points. So, what I heard was Saarthak stressing on the need for volumes and marketing playing an important role. So, do focus on the volumes. If you are setting up a hospital, that will be the major thing to drive profits. If you don't have enough volumes, I don't think that works. We also heard about a no-frills hospital, so don't unnecessarily gold plate your assets. And we've seen that in various industries, Indigo is the most profitable airlines because people don't get into a plane looking for luxury. If luxury is there, it is a good plus. But the most important thing is a neat and clean, safe, multiple options slides that gets you on time. So I think in healthcare as well, people are looking for a neat and clean, safe place that gets you surgery on time, gets you back home safe. So luxury is a plus, but I think a no frills hospital is something that we should look at. We also heard about how to focus on the metrics to look at what indices we should have in mind when we are starting out, how to clearly focus on operations, how to add more specialities to increase your ARPOBs. That is something that we looked at, and we also looked at how to make sure that you do not overspend on capex, how you make sure that your operations are lean and efficient, how not to have too many layers in your operations, how to make sure you build a flat structure to get return on capital as well as sustainable profits. I think the last point that we talked about in reference to Apollo and the fact that people are looking at patients as consumers and getting listed is that profits are not bad. Profiteering is bad. So we should have a clear distinction that in healthcare, we can make profits while doing good for the community. It's not necessary to have profiteering or not necessary to cheat patients to create profit. I think that is some takeaway points for all of you. And of course, once we are off the stage, we can chat more. Thank you so much for being such a patient and lovely audience.
Come on, everyone. Can we have a big round of applause for this amazing panel session over here?